Hello, this is Tim Congdon, Chairman of the Institute of International Monetary Research at the University of Buckingham. I'm talking to you at the end of July 2018, and I'm talking about a very big subject, which is the world economic outlook, seen from the perspective of somebody who worries about monetary trends, what's happening in the banking system. Now, in these presentations, I have over the last 6-9 months been taking a rather cautious view on the world economic outlook. Last autumn, I said that there was going to be a slowdown in money growth in America, United States of America, and the Eurozone. I was also a bit worried about China, but we'll come on to that. And I then said that although there wouldn't be a recession in 2018, there would be a growth slowdown. There'd be quarter by quarter slower growth of world demand and output because these three parts of the world economy are so fundamental. Now, this view has been right. The growth in the United States in the first quarter was at an annualized 2%, a little bit beneath trend. Not too bad, but a little bit beneath trend. In the Eurozone, the growth ran in the quarter itself at 0.4%, annualizing at about 1.5%, slower than for most of 2017. And as far as China is concerned, the official figures say things are fine, but in fact, there's been a bear market in the Chinese stock exchange. Share prices have fallen quite heavily. And since Chinese policymakers are taking action to boost the economy, they probably think there has in fact really been a slowdown. So there has been a growth slowdown in 2018, and what I was saying at the end of last year has been correct. Now, having said that, that's fine. Having said that, not everything has turned out exactly as I expected. What I thought was going to happen was that this is really a result of what's called policy normalization by the central banks. What's meant by that is that the central banks, having grown their balance sheets very rapidly to counter the Great Recession 10 years ago and then a little bit the years following that, I thought that they would, what they do is this policy normalization is they sell off some assets. If they sell assets to you and me, we pay for them from our bank deposits. Our bank deposits therefore go down. Bank deposits are money, therefore the quantity of money falls. And if the quantitative easing, the asset purchases in Great Recession increased the quantity of money, boost the economy, what's going on at the moment, this policy normalization, return to smaller central bank balance sheets, should be deflationary, should be slowing the world economy, reducing the amount of money in the major world economies. We had announcements about policy normalization from the Federal Reserve in America. They're going to step up the pace of what they call the asset runoff, the pace of sales of assets to $50 billion a month at the end of this year, the final quarter. And in the Eurozone, the European Central Bank, which was buying assets at the rate of 80 billion euros a quarter at the peak 2 or 3 years ago, will actually stop doing that altogether, according to what they've said in 2019. Now, so both of these major central banks is taking action that will lead to less money in the world economy than otherwise would have been the case. And that is deflationary, and that is why I thought there'd be a growth slowdown in 2018, which, as I say, has been correct. What hasn't been quite right is that in the last few months, a bit to my surprise, money growth in America, Eurozone, has actually just perked up a bit. And I want, in this session, to talk about all of that. So let's start with the United States. I'm just going to focus on 3 economies: United States, Eurozone, China. They are very important for the world. There are one or two things to say about American policy on developing countries, but that'll only just be a brief bit at the end. Now here's the chart for the United States. you can see the very left of the chart, plunge in money growth in 2008, 9, 10, Great Recession. Then this rather long period now of very stable growth of money at around about 3, 4, 5% a year. That's coincided with a very stable period of the growth of normal GDP, rising employment, steadily rising output, strong asset prices. It's been quite an impressive period in many ways, even if the underlying growth rate of the American economy has been less than was historically normal. Now, you'll see that looking at the very recent quarters, money growth was falling away, and then it's perked up at the end. Why? Well, the Fed has carried on with its program of asset sales. That does have some effect in reducing the amount of money. And if they sell these assets to non-banks, then it does reduce the amount of money. But something else is going on, which if the banks lend more, if they add to their assets, then in the process they add to the deposits on the other side of the balance sheet. And so there's a relationship between increased bank lending and growth of money. And what's happened in the last few months is there's been something of a bounce back in American banks lending to the private sector. If you then delve down into the data, what you see is that much of this has occurred at the Federal Reserve calls small banks, small commercial banks. And clearly what's going on is that there is some easing of regulations on small banks. All banks are badly hit in the Great Recession with more regulation. We've got Donald Trump as the president of America. There's been some easing up of the rules that have been restricting the financial system. They particularly favor the small banks. The small banks are growing, and they're growing quite quickly. They're growing their risk assets, their loans, at around about 8-9% at an annual rate. And obviously this means that then does create deposits on the side of the balance sheet. There is more money in the American economy because of that, and that offsets the effect of the Fed's asset runoff. What's my verdict on all this? My verdict, I suppose, is that we've probably got another few more quarters of growth of the quantity of money at around about 3, 4, 5%. It's okay. I mean, I am still worried that as the Fed increases the runoff to 50 billion a month at the end of this year and then carries on like that, presumably definitely, we may eventually see this holding back money growth too much. We just have got to watch the figures on a month-by-month basis. What about the Eurozone? The Eurozone is much more worrying, but in the latest figures, we again see this bounce back in lending to the private sector. I'm not sure I quite know why, but my surmise is it's tied up with lots of merger and acquisition activity. When one company buys another company, what it often does is it goes to its bank and says, can you lend us some money? You know, we're going to make this acquisition for, say, 10 billion euros. We've got some cash in our own bank account of 3 billion euros, but we need 7 billion euros from you, the bank, for us to carry out the deal. Alternatively, they might offer some of their own securities and their own paper to do the deal, but suppose that's not on, then they've got to put together cash or loans. So they borrow 7 billion from the banks. That 7 billion is a loan to the company. It is paid, bank deposit created, and that 7 billion euros is then paid over to the shareholders when they sell their shares to the bidding company, and that 7 billion of euros is newly created money. So some of this current wave of merger and acquisition activity is probably causing rather higher growth of bank credit than otherwise would be the case. All the same, I would suggest that on into later this year and into early 2019, we should worry about a further deceleration in money growth in the Eurozone, a resumed deceleration in money growth, and resumed weakness in economic activity. Then finally, some words on China. In China, money growth has fallen very heavily, and there has indeed been concern that it's gone too far. The Chinese authorities have taken action to allow banks to lend more, it's encouraging banks to lend more. We have to watch what's happening there. Anyhow, I think overall, the monetary background remains one of 2018, or remains of 2018, of a growth slowdown, but not a recession. And for early 2019, I would still be on the cautious side of optimistic. In other words, I would be expecting continued growth, not a recession, but actually more likely to be beneath trend than above trend for the world as a whole. One point, just little point to make at the very end, is that there are a lot of knock-on effects from American monetary policies all around the world, because obviously most countries use the dollar in their foreign exchange reserves and for many payments internally, and of course for all their external payments more or less. And the rise in US Fed fund rates, so far it doesn't matter very much, but there has been a rise, is alleged to have had adverse effects on, for example, Argentina, on the Argentine peso, also on places like Turkey, where there's been a weakness in the Turkish lira. And these developments are not good news for world economic activity, even though Argentina and Turkey are not that important to the world economic outlook. I hope that's been helpful in thinking about the balance of 2018 and 2019. I remain optimistic about the inflation prospect through to 2020. World inflation remains very much under control. Thank you very much.